Hello and welcome to this video. We are going to take a quick look in this video on how to use Finviz stock screener to basically identify oversold stocks using the RSI technical indicator. So this is going to be a step-by-step tutorial for identifying oversold stocks, which we can basically then look into buying or selling put options against them. So a quick preview as to what all we will be covering. We'll quickly take a look at what is exactly meant by oversold stocks. Then we'll see what is exactly the RSI indicator. And then we'll also take a look at the different RSI levels. So for RSI being oversold, different levels are there, and what is the significance of the different levels? What do they mean, and how many stocks will get listed, and how to basically use different levels in our trading. We will take a look at that, and then finally we will take a look at the overall the stock screener settings using Finviz. So we will look at the Finviz stock screener settings to identify good buying opportunities using the RSI oversold levels. So let's get started, and before we do that, a quick look at the disclaimer, which basically states that all the information that I'm sharing with you is only for entertainment purposes. I am not a financial advisor, and this is not any kind of trading and investment advice. So first of all, let's understand what are oversold stocks. Now, if you look at any particular stock, okay, let's say you're looking at Microsoft stock or Apple stock or any other stock, there can be periods where consecutively in certain time frames, let's say we are looking at a daily chart, then on consecutive days, there can be a lot of sell-off in the stock and the price can continuously come down. So usually we don't expect that to happen because prices don't move rapidly to the downside or rapidly to the upside. But when that happens, when there is a significant move in the downside direction, then what happens is that on a temporary or a short-term basis, the stock can be said to be oversold. That means there has been too much of selling pressure and the price has been pushed significantly down. So the interpretation of this particular aspect is that when a stock is oversold, it's kind of overstretched. It's like a rubber band being overstretched towards the downside. And so what happens when you overstretch a rubber band? It'll always try to go towards its mean position. So the same thing is expected for the stocks as well, that if there has been a recent pressure to move the stock towards the downside and that pressure has been excessive, that means the stock has fallen pretty sharply in price within a short time span, then the expectation is that now a correction is about to happen. Now, whether it does happen or it doesn't happen is a different thing, but one thing is for sure, that we can build a very sound trading strategy around it, which I'll discuss later. So stay tuned. But you have to understand that the stock has had a recent downward move, and the first thing that we want to do is to understand what is an oversold stock. So, a stock which has made a pretty significant move towards the downside in the past few days or the past few weeks, depending on whatever time frame chart we are looking at. If you're looking at a daily chart, then it will be a sharp decrease in the price over the past few days. If it's a weekly chart and the weekly RSI, then it will be basically a sharp decline in the price in the past few weeks. So we normally in swing trading deal with the daily charts. So oversold stocks essentially are kind of buy opportunities where they, for some reason, it could be a macroeconomic reason, it could be a company specific reason, it could just be earnings, or it could just be some big hedge fund or some big investor exiting the stock and selling off their positions, and not necessarily because there's something wrong with the stock. They may just be exiting their positions because they have just found a more lucrative opportunity. So any of the reasons can be there, but if you see a sharp decline in the price of a stock in the past few days, those stocks are basically said to be oversold. So what is RSI? So RSI stands for the Relative Strength Index indicator, and it's basically a calculation on the price which defines a number between 0 and 100. So for every stock, you basically know the price that is there for the past few days. And if you calculate the RSI, it is going to yield a number finally between 0 to 100, which is available on multiple platforms. You don't have to do the calculation. But what RSI basically signifies is that these numbers tell us whether the stock has been recently oversold. So in general, if the RSI for a stock is below 40, as I said, the RSI, if you calculate for any stock, it's going to be a number between 0 to 100. So if it's below 40, then the stock is said to be oversold. That means there has been a recent dip in the stock price. There has been a recent selling pressure, which has basically pushed the price to the downside. So RSI is a technical indicator, and like any other technical indicator, it is a calculation on the price. And this particular indicator basically gives us a quantifying number to relate and say, okay, if I want to list all the stocks which are oversold right now, I can just look for stocks which have an RSI less than 40. So it's a way of saying that the price for these stocks has recently declined. It's a technical indicator. And now we're looking at different RSI levels. So what we'll do is, instead of discussing here it on the slides, we'll head over to the Finviz platform, and there we'll take a quick look at what RSI is all about and how do we basically use, and we'll also take a look at the actual screener settings that we can use on Finviz to create a complete trading strategy. Okay, the screener settings is not just the RSI setting, but it's a combination of settings along with other things to make sure that we are identifying good buy opportunities or good opportunities where the stock is really oversold and it has a good potential to go up, and we can basically either buy the stock, we can go long, or we can sell put options against that and collect the premium. So head over to the Finviz platform now. So here you can see I have loaded the Finviz platform, and in order to use the screener, we will go to the screener tab. I'll leave a link in the description to this particular uh, uh, platform. So for those of you who are just getting started and are new to the platform, I'll leave a link down in the description. They have a free version which we'll be using right now, but they do also offer an elite version, which is a paid version, which has much more functionality. I have complete videos which detail how this platform can be used. If you're new to the platform, I have step-by-step tutorials on how to use this platform, how to basically extract the maximum possible information that you can. And I also have documented a lot of trading strategies around various things that can be done on the platform. So if you want, you can actually take a look at the Finviz playlist uh, on my channel, and I will basically leave links to all these things in the description. But for now, let's focus on oversold stocks. So we've already discussed what oversold stocks are. We've already discussed what the RSI is. So first thing I'm going to do is I'm going to click on all, so that all the filter options that are available on Finviz are visible to me. And then let's look at RSI. So as I said, you can see the different levels here, right? And you can see overbought 90, overbought 80, overbought 70, overbought 60. So these were the levels I'm talking about. Now we're not concerned about overbought in this video, we're concerned about oversold, because oversold stocks can form a very nice trading strategy. You want to buy stocks as trading at a sale, at a discount, not something which is trading at a peak. That puts you at an inherent advantage to basically see that the stock can rapidly go up in price, which is not going to be a significant upward move necessarily, but it's just a correction because the stock has sharply moved to the downside. Then normally what's going to happen is a correction, and those are things we can identify here. So I'll basically explain the entire strategy, and you will see that we are not just going to look at the RSI value to identify stocks which are good to buy. I mean, it's a bad strategy if you just say, you know what, the RSI is below 40, this thing is oversold, so let's go and buy the stock. That is not going to be a profitable strategy. We need to mix a couple of things and bring those mix a mix of settings into the screener to identify really good opportunities which can turn out to be profitable. And that is something which comes with experience, which I'm willing to share with you here, because anybody can tell you, go select this filter where RSI is less than 40, and that's going to give you oversold stocks. But are those the companies that you need to buy in? Definitely no. The answer is a definite no. You can try it out, and you're going to be having a lot of losing opportunities there. So we're going to improve our odds, and that's what trading is all about, improving our odds. Instead of having a 50%, 60%, 70% odd, can we have an 80% chance of having a trade which can go our way? And basically I do follow some rules as well. You can take a look at one of my videos which basically talks about my golden rule, which keeps me on the right side of things. That means it keeps me profitable on trades, and that basically rule, if I apply all those rules, I combine all the various settings on the screener, that is what yields a profitable and a winning trading strategy. It's not just one setting on the screener that I go and select the oversold stocks and that's going to be profitable. So remember that a trading strategy is not just a single setting on the screen or a single indicator even. It's a combination of things which you need to see, and that's basically what keeps you profitable and on the right side of things. And that in turn has to be combined with your rules of money management and trading psychology. So if all these three aspects are there, then that is what forms basically the reason behind an account which is profitable consistently. So the first thing, as I said, because we are looking at oversold stocks, so let me set up the RSI, and now you can see that Now only 726 stocks are being listed here. So basically there's 726 stocks where the RSI is oversold. But that's not enough, right? Because the first thing I don't want to do is I don't want to trade with companies which have very, very small market capitalization. And I have called this out multiple times in my earlier videos as well. These companies are really, really volatile, okay? Some company which has a market capitalization of 40, $50 million, a single big investment coming in, or a single kind of a hedge fund, or even high net worth individuals selling off their positions will rapidly push the price downwards. So first thing I'm going to do is I'm going to select a market cap which is above $2 billion. So now mostly we are going to end up with companies which are having a significant market capitalization. And these companies also tend to have one more thing, which is good volumes. But again, we're not going to assume the trading volumes are good enough. We are going to actually go and select the average volume, and I'm going to say above 500,000 shares. So I want to make sure that this particular company, whatever I get to trade in, this company has enough volumes on the stock itself. And this in turn, if you've seen my other videos, also kind of relates to another fact that if a company has good volumes on the stock price, then they do have some active option chains as well. So if you're into options trading based on this strategy, you can do that as well. But then you need to identify options which are actually liquid, because all stocks first of all don't have options, and secondly, even if they have options, they may not be liquid, so your bid ask spreads can be really wide, and we don't want that. So we select this volume thing here. Now, because I personally deal with options only, I don't usually trade with stocks unless I'm doing covered calls. So I'm going to select optionable as well, and this basically is going to display only those stocks which have options chains associated with them. So you can see earlier there were 124 stocks, now only 120 stocks are being listed here. So 4 stocks which did not have option chains have been taken off the list. So we've done some of the settings, and let's do one more setting, which is going to be target price, which is I'm going to set as above price. So target price is basically the price that the analysts feel that this stock is going to go to. It's the average price because multiple analysts are going to give their recommendation. So the average price, I want to make sure that I am not going against the analyst. I don't believe that the analysts are 100% right. Neither am I building a strategy which says that, you know what, if the analysts are telling me to buy something, I'm just going to go and blindly buy it. No, I'm not doing that. What I'm saying is I'm building a strategy where I don't want to go against the analyst. If some analyst is not saying something is the price target is above the current price, I want to stay away from it. And the recommendation has to be a buy or better. So I just don't want to hear about the hold recommendations or the sell recommendations. I don't want to get into that kind of stuff. I want the recommendation to be a buy or better. And now you can see here that the results are showing 63 stocks. So basically there are 63 companies which are satisfying this particular screener. And right now, with the given environment, the Chinese stocks are really volatile, and a lot of Chinese stocks are listed here. So we'll select the country also as US, as USA, just to make sure that we are only working with companies where for which the headquarters are based in the United States. We don't want to basically include other companies from the rest of the countries. If you don't want this, you can actually remove this filter. But now you can see we have narrowed down to 51 stocks. So now let's go to the charts, and we will display all the charts in one go. And now you can see that I'm going to do one more thing. By default, the technical charts are being displayed, but I am going to display the candlestick charts, and these are the daily charts which are being displayed. Now, one thing that you will see common in all these charts is that there has been a recent downward move. Why? Because we select this thing as oversold. So oversold, essentially, as I explained in the definition, implies stocks which have had a recent downward move. And if you see, that's the common flavor in all these charts: a downward price moment, a downward price moment, a downward price moment, a downward price moment. So that is going to be the common flavor here, and that is coming because of the setting that we just did here, oversold at 40. So one thing that we decided to cover was the different levels. Now, what do the different levels mean? So uh, the levels basically signify the the extent of the decline, the rapidness of the decline that is happening. So as I move towards zero, the decline is going to become more and more rapid. So if you see, these particular stocks have had some dip in the price, right? Now let's go and select stocks which are oversold at 30. So now only the stocks that are having an RSI less than 30 will come up, and you can see only 4 stocks are satisfying these criteria. And for these stocks, you can clearly see in the charts that the decline is absolutely huge, right? It's absolutely huge. It's much more than the decline that we were seeing earlier in the stocks which were having an oversold below 40, right? So that's what I said, that as you keep lowering this number as you go towards zero, the fall in price is going to become more and more aggressive. So if I do oversold less than 20, I don't know if anything will even come up, but if it does come up, yeah, so nothing has come up. So if there were any stocks which would have had an even a more aggressive decline, that means kind of a totally vertical decline, the price simply just tanking down in a straight line, those stocks would actually turn up on the screener where the RSI would be kind of below 20. It's most of the times we want to work with RSI below 40 because that gives a fairly good universe of stocks for us to work with, and there then we can analyze and see which of these stocks are forming good buy opportunities. So I'll just share a couple of settings that I use, and you can tweak these around. But I will share my trading strategy and my filters with you. And if you want, you can use them as it is, or you can tweak them around based on certain additional things that you may want to add, or if you want to basically remove some of the filters. So I'm going to go with oversold 40, and I hope by now the different levels, the meanings of the levels is clear. So RSI level 40 is an oversold condition, but it's less aggressive. The decline in price was less steep as compared to stocks that get listed when RSI is below 30. Anything which is below 30 is going to have a much sharper decline, a much more aggressive decline, kind of a vertical decline. And if you go to RSI below 20, it's going to be something even more rapid in terms of declining. So that basically indicates what stocks get listed at different RSI levels. Okay, so what basically we can do now is that we want to buy stocks or we want to sell. I basically don't buy stocks using this strategy. I sell put options because of the extra cushion that it gives. You can have a look at the rest of my videos and you'll find strategies on selling put options, which basically give multiple levels of cushion and keeps my trades profitable most of the times. So what I'm going to show you here is additionally what all settings can be done in order to improve upon our results that are already being displayed here. Already we have 51 stocks. So one thing you can see is that when there is a decline in the price of a stock, right, what do we want? We want to buy at a bottom. Just because the stock price is declining, does it necessarily mean that it's gonna stop declining? No, that's not the case. That's why I said if you just go with RSI, you're going to get into losing trades. That is not a good trading strategy. So people who trade just with the RSI are not going to have profitable trades because they are not looking at the bigger picture. We have already started looking at a bigger picture already because we are on the right side of the analyst. We are not looking at very small companies. We are looking for the good analyst recommendations. We are also looking at stocks that have option chains, so we can go and sell puts instead of outrightly buying the stocks, and that gives us more cushion. But what additionally can we do here is we can go to the candlestick patterns and look for a long lower shadow. So what a long lower shadow in a candlestick chart basically indicates is one simple thing. It indicates a bottom. If you go and study candlestick charts, or if you're already aware of it, candlestick charts which have a long bottom, a tail, basically indicate that these charts basically indicate that this is probably a bottom. And let me explain why. So I'm going to open this particular chart in a new tab so we can look at a bigger chart here. And so why would I basically uh, look at this chart and feel that this is kind of bottoming out? So we will take a look at that. And there are two reasons in this particular case if I really think about it. And for 1 second, I'm just going to go to the advanced chart so that we can get the technical drawings that Finviz provides by default onto this chart. Right. So now if you look at this particular chart, you can see that there is a double top here, right? So this particular chart has a clear high level here at around this level, and then if you see, it's kind of uh, here, this particular range around 398, around $400 rather, this particular range is kind of a support as well. You can see there are multiple points when the price, look at this particular candle. This was a long bottom candle. So the bears tried to push the price really down, but then they were unsuccessful, and this downward move was arrested, and the bulls took over and pushed the price up. The same thing almost happened at the same price level. This was 405, not 400 exactly, but again the price declined. But 400, 405 was the level when the drop was again arrested and the bulls pushed the price up. Again, the price came down to the same 405, 410 levels around this place. This is 411 this time, and again the bulls pushed the price up. So if I really look at it, this particular stock is kind of trading in a channel. The lower bound of the channel, I would say, is around $400. The upper bound of the channel is around $470, and we are lucky that we are finding the stock at the lower bound of the channel, which is close to $400. So at $400, what can be done? What I would safely say we can do is we can go and sell the 380 or the 375 puts. So where does that put us? That basically tells us that either one of the things happens. The first thing is this particular stock, and now first of all let's look at the target price. So the target price here is $486.65, which is very close to the high levels where it goes. So the stock can go to around 470, 480 levels. It's this particular, what I'm trying to essentially say is that it's touched the 470 levels, which is still below the target price set by the analyst, right? So this kind of a upward move till 470 is not something which is inconceivable. It's not something it happened by a fluke. That is basically the price below the price target which the analysts are setting for this particular stock. So there's a very good chance that this can go all the way back up, back here to the 470 or 480 levels, and that is very much a possibility. So essentially, right now, this particular stock has had a big decline towards the downside. Is it available at a discount? Well, the answer to that is yes. Why? Because we have had a big decline. We are kind of at the support levels, the more recent support levels. And the third thing is that the analysts are giving it a price target which is fairly above where it's trading right now. And to add to all of that, we see a candlestick pattern which has a long lower shadow, which indicates that on the last 2 days, just look at the last 2 days here, the bulls actually tried to push the price. The bears actually tried to push the price down, but the downward movement was arrested. And this arresting is happening pretty close to the levels where the arrest happened earlier as well. So kind of the 400, 405, 410 levels are the levels where once the bears, even though they have control, they start losing the control and the bulls kind of push the price higher. So this, if it continues, has a very good chance of going back up. And to be on safe side, my strategy would basically suggest selling off the 380, 375, 370, or even the 390 calls. That depends on the kinds of premium available, and what other patterns I can see on the different time frames. So let's go to weekly as well. And essentially what that's going to do is we are going to collect that premium, right? Yeah, so now we're looking at the weekly chart, and on the weekly chart also you see that the lower bound here in the past almost 1 year is around $370. So I was talking about selling the 380 uh, puts, right? That's going to be a very safe bet because the stock is right now trading close to $400. I can go $20 lower, I can sell the 380 puts and collect whatever premium is available at that price point. And so two things can happen here. Either the price stays above 380, in that case I just get to keep the premium and that's basically my profit. And the second thing that can happen is if the price actually falls below 380, then I end up buying the stock at a price below 380. That would be 380 minus the premium. So let's say I've received $5 in premium, then I'm buying with an effective cost basis of $375. So I don't make a loss as long as the stock stays above $375. And now you can see the $375 is kind of a very big support here, right? It's 370, $375 range is a pretty big support here. The price has not gone below that level for the last 1 year, and the price targets being set on this stock by the analysts are definitely at 480, 480 plus dollars, and so this in turn forms a pretty good buy decision. So this is now not something which is based only on technical analysis. Definitely we've done technical analysis, we've done multi-time frame analysis, we've also done fundamental analysis, not directly, but that's an indirect analysis because we have taken the analyst ratings into recommendation, and a lot of analysts do the fundamental analysis. They'll do the valuation of a company to see based on the intrinsic value of the company whether the stock is trading at a discount or whether what's the right target price for that particular stock, right? So this kind of analysis basically helps us to identify stocks which are trading at a discount. And I was able to narrow down to those two stocks with a long lower shadow. What I recommend doing is when you're doing the long lower shadow, also do the hammer, because the hammer is a special form of the long lower shadow. If nothing comes up in these results, that's fine. Now once one chart is coming up, but this chart would not come up with the long lower shadow. So this is also very interesting. I'm going to open it quickly. We'll take a quick look at why this stock or why this particular chart is very interesting to me. and forms a pretty good buy opportunity. Well, it's very, very simple again here. You can see these long candles in the past. So this is where the bears took control initially and they tried to push the price down, but then the bulls took control at the 110 levels and they pushed the price again back up. It's gone up here, then it's come back, it's gone up here. So this is a level which has been tested multiple times. Right, this is a level which has been tested multiple times, which is the 110 level, and right now the stock is trading very close to that, the 112.20, and so we can safely go and sell the $100 puts. Right, for the $100 puts, both these levels have to be broken, and then the stock has to come down by a good amount. So again, the hammers, the long lower shadows, we are adding this information, we are adding this to the existing stock. If you don't put in the candlesticks, already the stocks that we are getting listed are oversold, they are trading at a discount, they have good analyst recommendations, they have option chains available on them, so you can sell put options against them to get that extra cushion. But we are adding an additional thing to get this information, that whenever the price is basically in the recent times has been pushed down to the 110 levels, it's been pushed back up by the bulls. So if we combine all this information, the probability, I'm not saying this is 100%, this is not an exact science, it's trading, so it definitely works in terms of probabilities. But with all this, we are improving our chance of getting into trades where we don't end up losing money. So let's say on this particular stock, I trade and I go and basically sell a 105 or $100 put, right? And I collect $2 in premium. Then my cost basis on this stock is $98. So what that means is, if the price, unless the price falls all the way down below $98, I don't make a loss. And if the price falls below $98, what am I doing? I'm buying a share for $98 effective cost price, which has a price target of 132. So really good upside potential, really good rating provided by the analyst, and that's going to be a pretty good buy. I mean, would you not want to buy a stock which has had a get to buy it for 98 bucks? If you don't end up buying it at 98 bucks, then you get to keep all the premium that you're collecting. So one way or the other, these are going to be much high probability trades than outrightly buying the stocks and buying stocks without using the RSI. So I hope that how RSI works, what are the different levels in RSI, the RSI overall trading strategy, and how we can use the screener to identify stocks that are trading at a discount and which also satisfy a lot of other criteria, which makes them good buying opportunities. How we can do that with the RSI indicator using the Finviz stock screener. I hope that all that is clear to you. So we just saw the different RSI levels as we had discussed earlier, and now you can see we also saw the RSI oversold stock screener settings on the Finviz platform itself. So I hope this video was informative and you basically like this particular strategy. If you like the strategy, please leave down in the comments and tell me if you're going to be using this strategy to identify one of your next trades. And please subscribe to the channel and like the video, and please share it with your family and friends. Your comments are most welcome. If you have any suggestions or you want to request any specific videos, please leave them down in the comments and I will respond to that. Definitely subscribe to the channel because that gives me a good indication if you're liking my videos and the kind of content I'm putting up, and really motivates me to continue putting up more videos. Thank you for your time, and I'll catch you guys up in the next video.